Okay, let's unpack this. Today we're taking a deep dive into the latest from Hero MotoCorp, one of the titans in the two-wheeler world. We've got their Q1 FY26 financial results, their official press release, and even a peek into their recent annual general meeting.
Right. Our mission to cut through the numbers, understand the strategic plays, and pull out the most important nuggets, the things that will make you truly well informed about where Hero MotoCorp stands and where it's headed. You'll gain insights far beyond just a typical headline.
All right, let's dive straight into the financials then. Q1 FY26. What's the headline story when we look at Hero MotoCorp's revenue and profit? April to June this year.
Well, okay, starting with the standalone figures, their operating revenue came in at about 9,579 crore rupees. And here's the thing, that's actually a noticeable dip, both from the previous quarter, Q4, which was closer to 9,900 crore,
Right.
and it's a more significant slide from last year's Q1, which topped 10,100 crore. So yeah, a decline on the revenue front there.
Okay. Revenue down. What about profit?
Well, the profit picture tells a slightly different story. Their standalone net profit after tax the PAT, it actually nudged up slightly to 11,126 crore. Now, that's a small gain compared to Q1 last year, and a bigger jump from the previous quarter's 1,080 crore. So, revenue down, profit up. A bit of a mixed bag initially.
That is a mixed bag for sure. Now, if we look at the consolidated figures, they seem to tell a much more dramatic story. That consolidated profit jump looks massive. How do we explain such a big difference between the standalone and consolidated profits? What's going on there?
Right, and this is where it gets really interesting. It's actually a crucial point for, understanding the complete picture. That big surge in consolidated profit up to 1,706 crore. It's primarily, almost entirely, due to its substantial one-time gain. We're talking 722 crore rupees.
Wow, okay. A one-time gain. From what?
So this wasn't from their core bike selling operations. It came from the dilution of the company's share of investment in associates, specifically their associate, Ather Energy Limited, the
Hmm.
EV scooter company.
Oh, right. After they had their IPO, didn't they?
Exactly. Ather successfully completed its initial public offering during the quarter. This IPO meant Hero MotoCorp's stake was diluted, and that financial transaction resulted in this large one-off gain on the books. It really highlights why you have to look at both consolidated and standalone figures. Otherwise, you miss this massive piece of the puzzle.
Okay, that makes sense. A big boost from Ather's IPO. So the numbers tell that story, but what about the actual pulse of the business? How many units did they actually sell? What's driving demand on the ground? Were people, lining up for their bikes?
Yeah, good question. So in Q1 FY26, Hero MotoCorp sold 13.67 lakh units. Now that's a bit lower than the previous quarter's 13.81 lakh units, and notably down from the 15.35 lakh units they sold in Q1 last year.
Okay, so sales volume is down. That seems to contradict the profit figures a bit, especially standalone.
Well, yes and no. You might hear those volume numbers and think, uh-oh, demand's falling off. But here's the interesting part. The CFO, Vivek Anand, he actually commented on strong demand, specifically for their entry and deluxe motorcycles, and also the 125cc scooters. And he mentioned steady retail demand reflected in higher VA-HAN registrations. Those VA-HAN numbers, they're the official vehicle registration, so that shows what customers are actually buying from dealers.
Hold on, that sounds like a contradiction. How can you have strong demand, strong retail registrations, but lower dispatch volume from the company?
Great question, and they addressed this. The company explained that the reason for the lower dispatch volumes, what they shipped to dealers, was a temporary production pause. This wasn't some unforeseen problem. It was actually part of a planned operational strategy during the quarter.
A planned pause.
Yeah. So while it definitely impacted the overall dispatch volumes you see reported for Q1, they say it has since normalized. Think of it like a strategic timeout rather than a sign of underlying weakness. And you can kind of see that underlying strength reflected in their margins. Their standalone EBITDA margins, they remain solid at 14.4%, exactly the same as last year.
Impressive given the lower revenue.
Right. And the consolidated EBITDA margins even improved slightly to 14.5% from 14.3%. So despite that temporary production pause hitting the dispatch numbers and the dip in standalone revenue, the underlying demand they mentioned and their ability to maintain profitability, they seem pretty resilient.
That's fascinating. A production pause hitting volume, yet margins holding firm. Does that suggest really tight cost controls, maybe? Or perhaps their product mix, like premium bikes, helped offset it? And how does all this tie into their product strategy and their push into new areas? Are they just, sticking to the basics, or are they really innovating?
I think it's a bit of both, honestly. And they're definitely innovating while also making sure their core business is strong. They've strengthened their product positioning, for instance, by enriching their portfolio. They launched the Destiny 125 and the Zoom 125.
Right, hitting that popular 125cc scooter segment.
Exactly. That's a clear strategic push targeting, that growing urban demographic looking for convenience and style. But at the same time, they expanded their 100cc motorcycle portfolio, their bread and butter, with the new HF Deluxe Pro. So it shows they're defending their high volume entry level market share too. It's kind of like a smart dual approach covering both ends.
Makes sense. Bolstering the domestic lineup. What about outside India? Are they pushing hard on the global front?
Absolutely. Their global operations are actually outperforming the general industry trends in those markets, which is a really positive sign. It suggests their international strategy is starting to pay off. For example, they just launched 4 new products in Sri Lanka, partnering with Avon's Auto there.
4 new products. Which ones?
Yeah, the Zoom 110 scooter, the Hunk 160R 4V, the Extreme 125R, and the HF Deluxe motorcycles. Rolling out a lineup like that in a key international market like Sri Lanka, it really shows a very clear, aggressive global growth strategy.
Okay, interesting.
But what's truly fascinating here, and maybe one of the biggest strategic bets they're making, is their push into the EV segment. Electric vehicles. They're reporting steady momentum in their electric mobility business, which runs under the Vita brand.
Ah, yes, Vita. What's new there?
Well, quite a bit, actually. Starting July 1st, just recently, Vita introduced a pretty innovative subscription-based battery-as-a-service model, BOSS, they call it, and alongside that, a brand new EV product, the eVoter VX2.
Battery as a service, like swapping batteries instead of charging.
Potentially, yeah, or leasing the battery separately. And to make sure everyone knows about it, they ran a big, high-impact TV and digital ad campaign. You might have seen it during the IPL cricket season. It was called Charging Simple. Charging is simple, and it really focused on their removable battery tech.
Right, I think I remember seeing those ads.
And underscoring this EV commitment, they also invested 510 crore rupees in Euler Motors Private Limited. That's another EV company. They took an associate stake during the quarter. So this isn't just dipping a toe in the water. It feels like they're really trying to shape the future of their mobility offerings.
That's a significant investment in EVs, alongside the new models and services. Okay, so beyond the products and tech, what about their brand presence, marketing? Are they expanding their physical reach?
They are, yeah. They're clearly investing in both physical presence and brand visibility. They just inaugurated their 100th Hero Premia store. These are their more premium dealership outlets. They opened new ones in places like Murshidabad, Nashik, Muzaffarpur, and even a 4th one in Bangalore. So expanding that premium retail footprint.
Right, getting the premium bikes in front of people.
Yeah. Exactly. And on the marketing and brand ambassador front, they've signed up professional golfers Akshay Bhatia and Sahith Theegala as global ambassadors, reaching a different audience there. And in motorsports, which Hero is quite involved in, their Hero MotoCorp Team Rally added a new international rider, Tobias Epster, reinforces their performance image. So it's definitely a multi-pronged approach to building the brand.
Okay, lots happening operationally.
Yeah.
Now, shifting gears a bit, what about the view from the boardroom and the shareholders? You mentioned the annual general meeting. How did that go? Was it smooth sailing or were there any contentious issues?
Well, the 42nd AGM was held very recently, August 5th, 2025. And by all accounts, yeah, it was a pretty smooth affair. All the resolutions that were put to vote passed with really overwhelming majorities, which, generally indicates strong shareholder support and confidence.
Like what kind of majorities are we talking?
Well, for instance, adopting the audited financial statements for FY25, both standalone and consolidated, got like 99.85% votes in favor, almost unanimous. Even the total dividend declaration for the year, 165 rupees per share, that was confirmed with 99.9999% in favor. You can't get much higher than that.
Wow, okay. Pretty solid backing then. Any director reappointments? Sometimes those can be tricky.
There were a couple, yeah. Mrs. Vasuza Denodio was reappointed as a director with over 98% approval. And Air Chief Marshal Birender Singh Dhanoa, a retired Air Force chief, was reappointed as an independent director with over 93% approval. So even those received very strong majorities. It really paints a picture of pretty high confidence from the investor community in the current leadership and direction.
Okay, so management seems to have clear backing from shareholders. What's the word from them looking ahead? The upcoming quarters, are they feeling optimistic? And are there any potential, speed bumps on the horizon we should be aware of?
Management is certainly sounding optimistic. The CFO, Vivek Anand, specifically expressed confidence. He said they expect to sustain and drive growth in the coming quarters. And he points to a few reasons. Favorable customer sentiment, the big upcoming festive season, always huge for two-wheeler sales in India, and what he called a robust pipeline of new product launches.
So more new bikes and scooters on the way.
Seems like it. But while the outlook is positive, this does raise an important point about potential uncertainties, especially on the regulatory front. The Ministry of Environment, Forest and Climate Change just issued these new rules, the Environment Protection End-of-Life Vehicles Renewals 2025, or ELV rules.
End-of-life vehicles. What does that mean for Hero?
Well, these rules became effective April 1st, 2025, and they impose something called Extended Producer Responsibility EPR on vehicle manufacturers. Basically, it means manufacturers like Hero are now held financially and logistically responsible for managing the recycling or scrapping of their vehicles when they reach the end of their useful life.
That sounds like a significant new responsibility, and potentially costly.
It could be. But here's the catch, and it's a big one right now. The centralized online portal that's supposed to manage this whole system, it's not developed yet. And the specific details like the registration process, the pricing mechanism for these EPR certificates they'll need, the measurement framework, none of that is available yet. So what that means is the company currently can't reliably estimate the financial impact of these new obligations. It's a big unknown hanging out there.
Oh, okay. A future cost or obligation,
Okay.
but impossible to quantify just yet. Any other potential issues mentioned?
They did briefly mention a resolved income tax demand of about 178 crores from FY24. They appealed it. They expect it to be resolved in their favor, so they didn't need to make a provision for it in these results.
Oh,
And they noted there have been some past investigations against the company and its chairman by other government agencies. Some of those have apparently concluded favorably. Based on the information they haven't identified any material financial adjustments needed right now, but, there's always some lingering uncertainty with ongoing investigations.
right. So wrapping this up then. Hero MotoCorp in Q1 FY26, it looks like a bit of a mixed bag on the surface. Revenue and volume took a dip, partly due to that planned production pause. But margins held up surprisingly well, and that consolidated profit got a massive boost from the Adder IPO gain.
Exactly. And strategically, they're clearly investing. New products in both their core segments and the growing 125cc space. A really significant push into EVs with Mida, the Bass model, new products and investments. Plus expanding globally and strengthening their premium retail presence. And as we saw, they seem to have very strong shareholder backing based on that AGM.
So lots of moving parts.
Definitely. Which leads to maybe a final thought. Considering the company's clear focus now on electric mobility and global expansion, side by side with maintaining their huge traditional business, and then you throw in these significant regulatory changes like the ELV rules, where the financial impact is still a big question mark, how do you think Hero MotoCorp will balance that? Balancing its legacy market dominance with this urgent need to innovate, to pivot to EVs, and adapt to all these evolving challenges. It's not just about selling bikes anymore, is it? It's about navigating a whole new landscape. Food for thought.